I've been getting this question a lot lately. Are rates going to drop to 5.5% this year? Should I wait? And I get it. After watching rates bounce around in the sevens for a while, the idea of a 5.5% mortgage sounds like a dream. So let me just tell you straight what the experts are actually saying, what I think, and what it means for you right now. Here's the honest answer. Most of the people who spend their entire lives watching mortgage rates, I'm talking Fannie Mae, the Mortgage Bankers Association, the National Association of Realtors, they're all forecasting rates to land somewhere between 6% and 6.5% for most of 2026. As of right now, the 30-year fixed rate is sitting right around 6.1%. So we've already come down meaningfully from where we were. Now, could we see 5.5% this year? Here's where it gets interesting. Morgan Stanley, one of the bigger financial institutions out there, actually forecasts rates could touch that 5.5% to 5.75% range, but only briefly, around mid year, if the 10-year Treasury yield drops the way they're expecting. Bankrate's senior analyst said something similar. He thinks we could see 5.5%, but it would take Fed rate cuts and something of a recession scare to get us there. So here's the simple, digestible version. 6% is the base case. 5.5% is possible, but it's the optimistic scenario, not something you should count on or build your plans around. And this is where I want to be your knowledgeable friend for a second, because I've watched people make this mistake for nearly 30 years. People hear rates might drop, and they sit on the sidelines, waiting, waiting for that magic number. And you know what happens? Home prices keep climbing. In fact, since 2022, home values have appreciated about 17%, even while rates were high. So while people were waiting for rates to drop, the homes got more expensive. I had a survey cross my desk recently that said 4 out of 5 home buyers are still waiting for rates to fall before they buy. A quarter of them want rates below 5% before they even look. And I understand that instinct, I really do. But 5% isn't happening anytime soon. That was a pandemic era emergency situation that nobody expects to come back. The question I always ask my clients is, can you afford the payment today? Because if you can, and if the home is right, waiting for a rate that may or may not come could cost you more than you'd ever save. So let me break this down by where you might be right now. If you're thinking about buying, rates in the sixes are not the enemy. You can always refinance if rates drop to 5.5%. What you can't do is buy the same house for less money once prices go back up. The old saying, marry the house, date the rate, actually applies here. If you already own a home and have been thinking about moving, this is where I want you to pay attention. If you've been sitting on your equity, waiting, hesitating, there are options right now that most people don't even know exist. You don't have to sell first, scramble to find something, and then move in one chaotic day. There are programs that let you buy your next home first, get settled, and then sell your current home on your own timeline. That's a completely different experience, and one I help people with all the time. If you're refinancing, if your current rate is 7% or higher, even moving to 6.1% today is meaningful savings. You don't have to wait for 5.5% to make a move that helps your monthly budget right now. Bottom line, the experts don't expect a sustained 5.5% rate this year. It's possible, but it's not the plan to build on. What I'd encourage you to do is stop watching the number and start having a real conversation about your situation. Because every situation is different, and a one size fits all approach doesn't work in real estate or mortgages. I've been doing this for nearly 30 years. I'm happy to run the numbers for you quickly and tell you exactly what your options look like today. Not in theory, but your numbers. If you've got questions, I answer my phone. Drop a comment below, send me a message, or just give me a call. I'd love to be that resource for you.